sixth chapter of our topic on accounting information system, referring to the revenue cycle, one of the main transaction cycles inside an accounting information system. This revenue cycle is more appropriately described by the title of our chapter, Sales to Cash Collections. All right? So revenue cycle. Revenue cycle is defined or is discussed as a recurring set of business activities and related information processing operations that are associated with providing goods and services to customers and collecting cash in payment for those sales. If you notice, the definition of a revenue cycle resembles that of the expenditure cycle. It starts from something and it ends with cash related. However, if you notice that revenue cycle is directly inverse of the expenditure cycle. In expenditure cycle, you are getting something by parting ways of your cash. That's why it ends with cash disbursement. But you receive something from your supplier, which would be the goods or articles or even services received from them. The inverse of that one is revenue cycle. You are not receiving, but rather you are parting one of your assets. That would be inventory or your services. You're giving it out to the recipient, which will be your customers. An exchange for that one is you will receive cash collection or cash receipt instead of cash disbursement or cash payment in the expenditure cycle. So it can safely be said that revenue cycle is the inverse version of an expenditure cycle. All right? While we've mentioned in the expenditure cycle that most of the transactions or processes involved are internal in nature, and there is one primary external exchange, and that would be the suppliers. In the revenue cycle, we have the customers as the primary external exchange of information. The customers would be the prime entity. They are the prime entity that are external or considered to be outside of the organization. Information also related to a revenue cycle may also come from different accounting cycles. Say information from expenditure cycle will tell us with the amount of purchases made for the period that will be adjusted now with the availability of, say, inventory or items when orders or sales information are entered by the revenue cycle. Because the revenue cycle will capture now the demand from the customers, and it will tell us if the current inventory levels would be sufficient, and therefore we look into the expenditure cycle so that we can order now what we call the back orders, which we have discussed in the previous chapter. An example of these relationship of the revenue cycle with other transaction cycles inside an information system would be the expenditure and production cycles would use information from the sales transactions to determine now the sales demand. And I've mentioned previously that in making budgets, it's the sales budget that is the first to be prepared by an entity, because the sales budget or the sales estimate or sales forecast will determine now the amount that will be ordered by the expenditure cycle or that will be produced or manufactured by the production cycle. So a revenue cycle is interrelated with other transaction cycles, and it is very important because sales forecasts and sales demand do dictate the direction of the business, how the business would move forward, or how the business will operate for the specific period, and that would usually be within one annual cycle or yearly cycle. Another example would be human resources management or the payroll cycle will use the information about sales to calculate sales commissions and bonuses, especially if you have sales personnel whose compensation are not merely fixed by the salary package, but also is determined by the commission, by the amount of sales they made, and the percentage of such sale will become will be paid as a compensation, such as a commission or bonus to these employees. And therefore, sales information is very important and very critical with respect to payroll processing. Now, the revenue cycle's primary objective is to provide the right product in the right place and at the right time for the right price. If you notice, yung expenditure cycle natin, the primary objective is actually to find the right product for the right quality and for the right price. In fact, it's the highest quality for the lowest price or the lowest cost. But the revenue cycle, it is to provide the product because we're selling it, we're providing it to our consumers. What would be the most appropriate product for the right place, for the right time, and for the right price? To accomplish this objective, the revenue cycle would have to answer several questions. Examples of these questions would be to what extent and should products, or to what extent that we can customize products, and what type of products can be customized to individual customers' needs and desires. Because sometimes customization of products will be more costly compared to standardly produced ones. And therefore, the revenue cycle will provide us the necessary information to determine up to what extent or to what level that customization of products would lead to revenue or profit, or to what certain number of customers would a certain customization would result to break even or even profit for that matter. Another would be how much revenue we have to carry as an entity, or where should inventory be located, or how should merchandise be delivered to the customers. Should the company perform itself the shipping function? Do we ship or deliver these products directly to the customers or by the entity itself? Or do we outsource this one to logistics partners or logistics provider? So you get that kind of information from the revenue cycle because you basically have to provide this additional costing and compute whether this will be profitable or not. All right. Now, I've discussed this one. These are the questions, by the way. I just forgot to change the slide decks. Now, the revenue cycle context diagram will allow us to understand now the revenue cycle and its relationship with other transactional cycles in an overall accounting information system. You notice, class, that the revenue cycle is triggered as aptly described in the title of the chapter by the sales order. And this sales order would come from the customers. Customers would have to inquire first. Usually, customers would make inquiries with respect to the availability of these items, the quantity that we may be able to provide, the entity may be able to provide or deliver, and at the same time, what would be the unit price to a certain volume of items to be purchased. Because sometimes volume-based, the unit prices would probably be lower compared to retail price or those buying it piecemeal or in small items. Now, if you refer now to the expenditure cycle, remember that we're sending purchase order, right? In this case, the customer is the buyer. And in this arrangement, the buyer is using its expenditure cycle. So basically, the purchase order that will be sent by the buyer or our customer is the sales order that we are receiving inside the perspective of the revenue cycle. So it is safe to say that the PO or the purchase order in the expenditure cycle is actually the sales order in the revenue cycle. And it differs lang based on the perspective. It's purchase order because you're the one acquiring it, and then sales order because you're the one selling it. But that's the same species, same animal. When the customer order or the sales order is received by the revenue cycle, the revenue cycle will then have to request information coming from the expenditure cycle and the production cycle, because you don't approve for that particular customer order without checking first. Do we have sufficient inventory level for this one? Do we have sufficient number of items that will make good of this particular order? The expenditure cycle and the production cycle, hand in hand with information gathered from the inventory warehouse, would provide the revenue cycle of the inventory balance. For a merchandising type of business, obviously you are buying it and then reselling it to your customers. Basically, the expenditure cycle will tell you if this inventory level is sufficient, because if it's not sufficient, there's a back order. The expenditure cycle will have to reorder again, considering the reordering point of whether the arrival of these new deliveries will be on time to make good 100% of the customer order. Or if not, then you inform the customer order that you'll make multiple deliveries to make good 100% of the total order made by the customer. If the business is not merchandising, it is manufacturing, meaning your products, you manufacture, you produce your own products. The production cycle will tell you the availability of the finished goods. If the finished goods are not sufficient, then therefore the production cycle will have to determine the raw materials needed in order to produce the total number of finished goods sufficient to comply with the back orders, and then forward it to expenditure cycle, because the expenditure cycle will order now the raw materials needed for production. So that's how related the expenditure and production cycle with respect to the revenue cycle. Now, if the order is good, meaning there is sufficient level of inventory or products available to make good of that particular order, the revenue cycle will then prepare what we call the packing slip and the bill of lading. We will discuss later on what kind of documents are these, but packing slip would tell you the packaging of the items or inventories and how many items are included in a single package. The bill of lading is a document that is forwarded to the shipper or the carrier that tells you the total amount, the total number of quantity involved in each packages, and these quantities are to be delivered to the certain buyer or customer. The carrier will then deliver now these items to the customer together with a copy of the bill of lading and the packing slip. The bill of lading and the packing slip will help now the customer determine if the items delivered are actually 100% to that of the sales order, meaning there should be a match to that order made and to the items being delivered. If there's an overage, you have to reject it, and if there is insufficiency of the delivery, then the seller would have to deliver again, or will just reduce the accounts receivable to be created out of this delivery through a debit memo, which you have familiar. You assume you're already familiar, since we've already discussed that one in the expenditure cycle. You will only have to what do you call that one? Appreciate the fact that when the delivery to the customer is made, remember that the customer will have to receive it, and the receiving is an important component of what cycle? Expenditure cycle. So it's really interconnected. If you notice, this is the revenue cycle, the perspective of the seller. Upon receipt by the customer will receive these items, and that's voila, expenditure cycle with the perspective of the customer, because the customer is the buyer. Now, if you notice the arrow there, class, it seems that the revenue cycle will send now invoices and monthly statements to the customer, and that would depend now on the payment terms followed. The customer, if it's already on or before the date of the payment terms, and to make sure that there's no interest to be paid on that particular order, will have to pay on time, send the payment to the revenue cycle. The revenue cycle will then send this cash payment to the bank for deposit, and the bank will provide you with the statement of accounts, monthly statement accounts containing the ins and outs of cash in that particular bank account. The revenue cycle will also have to record the cash receipts under the general ledger and reporting system, as well as the total sales made. Note that the cash, the sales made will be a receivable. It would probably be an accounts receivable debit and a credit of sales revenue. And then once payment is received from the customer, then it will be a debit of cash and credit of accounts receivable, meaning the settlement or reduction of the accounts receivable account through payments made by the customer. The revenue cycle will also provide information as to the total number of sales, period, and the sales made by each of the sales personnel or sales agent or salespeople to the human resources or payroll cycle to determine the computation now of the appropriate commissions and be paid on time during the payroll cycle, right? So that's the overall context diagram of a revenue cycle in relation to other transactional cycles. Now let's proceed to the data flow diagram. This is more intricate, and if you notice, this is now entering the actual revenue cycle. A while ago, if you notice the context diagram, you'll see there an entire circle representing the revenue cycle. Inside the revenue cycle, class will have a division of four important important cycle activities. They are the 4 revenue cycle activities. First would be the sales order entry, which is basically the receipt of the sales order or customer order. Now, this triggers now the entire revenue cycle, meaning if there is a sales order made, which is already an approved customer order after inquiry and after agreement between the customer and the supplier, or between the entity, us, tayong nagbebenta, and that will trigger now the entire revenue cycle. The second will be the shipping, which is the delivery of the actual items ordered to the customer. And third will be the billings. And fourth will be the cash collections. Now, you notice, class, that in this particular data flow diagram, which starts with sales order entry, it would come from the customer. And again, as explained, this is similar to the context diagram that we've seen in the previous slide deck. Here, there will be inquiries, response to the inquiries from the revenue cycle, and then the sending of the sales order. Once the sales order is sent, if you notice, the revenue cycle will get information from 2 other transactional cycle, would be expenditure cycle and production cycle. The expenditure cycle will provide now information about items or goods available for sale, while the production cycle will determine now the number of items or inventory needed for production and purchasing needs. If you notice, hand in hand, it will tell now the revenue cycle from the expenditure and production cycle if we have sufficiency in terms of items or goods that will be provided to or delivered to the customer, or if there will be insufficiency. And if there is insufficiency, we call that one as a back order, right? Now, if you notice, after the sales order has been approved, it will get also information from the inventory. And then once the sales order is approved, then it will be forwarded to the shipping department. And another file will be made, filed as a copy of the sales order. Now, a copy of the sales order forwarded to the shipping department, which will then prepare now the items for shipment. They will pack it. We call it in the palletized packet, and that will be included in the packing slip together with the bill of lading. Because sometimes the total order will be like this, but you palletize it, meaning there's a box of packaging and how many items included in the box. Hindi mo na bibilangan yan sa box eh. So there's an assumption now, if it's properly counted, that each box would contain, say, probably 100 items. So in order to make 100,000 order, and there's only 100 items per box, then how many boxes needed now to be delivered? So yun yung nakalagay sa packing slip. Na ilang boxes yan, is ito yung laman ng ilang boxes, so therefore there would be this number of total of quantities or items expected na ma-receive ni customer. And then it will be forwarded to the shipper or the carrier, and then the carrier will deliver to the actual customer. After delivery, a copy now of the bill of lading that has been prepared by the shipping department will be forwarded to the billings. And then the customer will have to receive later on a statement of accounts or invoice coming from the billing department after the billing department has reconciled its information or data coming from the copy of the sales order and the bill of lading that has been forwarded by the shipping department. If you notice, may arrow din yan, yung sales order copy from the sales order entry to the billing department. So multiple copies yan siya. But bear in mind, class, that the multiple copies that we are contemplating here would refer to the manual function, because in an accounting information system, an automated one, you don't have to prepare multiple documents, because what will be given lang to these departments will be access. So the billing department and the shipping department will have access to the sales order documents, and that access will allow them to check on the sales order for verification of the other documents that they will receive. And once verified, walang discrepancy, the billing department will send now the invoice to the customer, right? Now, once the invoice has been sent, and then the customer is waiting only for the payment terms. For example, the payment terms is 30 days. Wala namang masyadong businessmen kasi na nagbabayad ng maaga. Kasi most of the cash that they use would be reinvested to the business, or they have more worthwhile things to do. So they usually wait for the payment terms. Now, if the payment term has arrived, say, after 30 days or 60 days, and then the 60th day dadating na, the customer will have to pay now the entity, tayo na nagbenta sa kanila. And that payment will then go to the cash collection. And that cash collection If it's cash collection, it will be deposited to the bank. If it's check, it will be deposited to the bank as well. Now, if bank transfer naman, it will just be a confirmation coming from the customer, sent it to the cash collection or collecting department, or even treasury, we call it, that the payment has already been transferred, and the treasury will just have to look into the bank account or get a confirmation that there has been receipt made for that particular date, and then inform the customer that it has already been paid. Magsisend ka rin ulit ng statement of accounts saying that these are already paid. These transactions or these invoices were already paid, at ito yung balance mo at the end of the period. Kasi it could be that there are multiple transactions and these are the only invoices paid and may mga balance pa. Right? And then, the cash collection or the payment received by the cash collection department or treasury will then provide a copy now of the document of cash receipts to the general ledger. The general ledger, having received a copy of the sales order or the sales information coming from the three other cycle activities, yung sales order entry, shipping, tsaka billing, the general ledger system will have to record now the balances in the general ledger accounts. Yung accounts receivable, yung sales account, yan yung mga general ledger. Pag sinabi natin general ledger class, yan yung mga accounts na nag-appear sa balance sheet or income statement, na naka one-line item lang tapos may balance siya for the year. If you go inside that particular balance class, you'll go to the general ledger para makuha mo kung ano yung nagko-comprise sa balance na yan. Say, for example, if you go into the cash balance and there's 1 million, how come that it's 1 million at the end of the year? If you go to the general ledger, you'll see the ins and outs of cash from January 1 up to the end of the period, and then we'll tell you, once you've actually computed it, you know, plus minus, you'll have to come up with a balance that will be equal to that presented in the financial statement. Kasi yung sa financial statement, general ledger balances na lang yan. Hindi yan sinasabi kung paano na come up yung balance na yan. And when you want to check how the balances were come up, you go to the general ledger. Okay? Kasi para yan siyang, ang general ledger, ang concept niyan is para yan siyang drawer ng files. Each drawer is each account. And we open the drawer, there are certain documents there na nakalinya, folder, yan yung mga transactions. Pero pag kinlose mo yung drawer na yan, tapos may nakalagay na balance na 1 million, alam mo na agad na 1 million ang laman ng drawer na yan. Pero paano naging 1 million, bubuksan mo yung drawer, nandun yung documents. Yan yung concept ng general ledger. Alright? Now, let's proceed doon sa mga threats na available per revenue cycle activities, and what are the different controls that are provided or suggested in order to address the threats in each of these cycle activities. The first will be just general issues. What are the general issues that are to be envisaged in a particular revenue cycle? First is the inaccurate or invalid master data. Sinabi ko na sa expenditure cycle class that master data refers to information na hindi transactional but rather they're very important in each transaction. Ito yung mga list of suppliers, list of customers, list of inventory or items. Hindi sila transactional. Pero sila yung ginagamit natin to track certain amounts. See, for example, magkano yung utang natin sa isang particular supplier. Okay, so, di ba may transactions kang i-record, pero paano mo itag yung transaction na yan? Of course, itatag mo siya on a particular supplier. So, yung supplier information na yan, class, yan yung master data. Okay? Or kung meron kang customer, magkano ba yung kinita natin from that customer? Magkano ba yung binili ni customer? So, i-record mo yung transaction ni customers, di ba? Pero paano mo lalaman na kay customer yan? Of course, kailangan mong i-pick or i-choose yung information ni customer para matag yung transaction na yan. And we call the customer information as master data. Included in the master data also will be item master data, would be a list now of information with respect to your inventories, whether these inventories are for sale, for consumption, as long as they're being tracked as inventory, meaning may na-track tayong inventory balance of the year, we call this inventory. So we call that as item master data. Another threat will be unauthorized disclosure of sensitive information, loss or destruction of data, and poor performance. What are the different controls to address this one? For inaccurate or invalid master data, the control suggested here will be to provide integrity controls. And one of the integrity controls here would probably be to restrict access to master data. And as restricting access to master data now would mean that there is accountability as to the single person who will change the information or record this information. Kasi if you allow every single member or employee of your organization to process these master data, then there's no quality control. It could be different names, it could be different information, and it also lessen the accountability because everyone will just pinpoint each other saying na siya nagkamali. But if you point someone, make someone as a point person, and he is the one who basically responsible in editing the master data, then my quality control. Another will be an authorized disclosure of sensitive information. We have access controls, encryption, and tokenization of customer personal information. For loss or destruction of data, one control is to create a backup and disaster recovery procedures. And for poor performance, one suggested control will be managerial reports, because managerial reports demand accountability and quality and excellence also from the staff or from the employees, related to maintaining the master data or maintaining the revenue cycle general information. Now, for sales order entry, if manotice ninyo, there are also threats here, but we'll just go over these threats later on, and the controls, the suggested controls. Nag-record ko te. Suggested controls for these particular threats. Also, for shipping, which is the second cycle activity, and third would be for billing, and then fourth will be cash collection. Now, let's proceed to the first cycle activity, which is taking customer orders. Now, note class, in taking customer order, nakita natin kanina doon sa data flow diagram natin, number 1 lang yon, di ba? Taking sales order. But here, in this diagram, in the right side of the slide deck, you'll see there that inside the sales order entry, it will be comprised, subdivided into 4 different activities. That starts with taking order from the customer, followed by the approval of the credit. Then third is checking inventory availability, which means that once approved, you have to check the inventory balance, if you can actually deliver the items on time, or do you have to reorder again. If it's merchandising, again, it's reordering. If it's production, then you have to manufacture additional number of items. And the fourth cycle activity will be to respond to customer inquiries, yung customer support. Yan yung laging sa mga BPO, di ba? Yung mga responding to customer queries and everything. Now, if you notice, class, in the taking of the order from the customer, obviously we've already discussed that one in the general scheme of our data flow diagram, yung kanina, yung nasa una. But once the customer order has been received, kailangan mo na i-check yung credit ng isang particular potential customer. Is the potential customer good in terms of paying liabilities? Has there been any problems in previous time of payment of these particular customers? Because if there's a bad credit, then usually you decline the particular order because there could be additional problems later on in terms of collection. So there is approval of credit. Now, in checking the customer file, you check the history of payments made by the customer. And once approved yung ating credit, then basically the order will push through. If the credit is rejected now, it will inform the customer that the particular credit is rejected, or the application or order is rejected. But if the credit is approved, meaning the order is approved, then it will proceed to the third level, which is inventory availability. The inventory availability will actually get this information from the inventory control or the warehouse personnel or the warehouse department, telling you ito yung level of inventory available. Kaya pa mag-order. Now, if the order is still okay, meaning the inventory level is okay for the order, then the third, after check inventory availability, it will be acknowledged to the customer na our inventory is sufficient. We can make the delivery for this particular order. And if it's already acknowledged, then it will proceed now to the preparation of the completion of the sales order. Meaning the sales order is completed, approved, and it will be filed now. The filed sales order will then be informed to the fourth one, which is to respond to customer inquiries, which with respect to their order. Kasi di ba magpa-follow up yung customer na yan, sana yung order namin, etc., etc. Now, after the approval of the sales order, you notice that copies of the sales order are forwarded now to the shipping department, the billing department, the warehouse personnel, because the warehouse personnel will have to bring out these inventories outside of the warehouse for the shipping department to pick. Kasi pipick yan yung shipping department for delivery. And another copy to the purchasing department if there will be back orders should the inventory level is not sufficient. Right? So that's basically explains now the sales order entry. Okay? And the discussion in the left side of your slide deck will tell you now the discussion on each of these 4 sub-cycle activities under the sales order entry. It is important to note, class, that the approval of the credit will also include if the order has not exceeded or has exceeded the credit limit, which is the allowable account balance that the management wants for a particular customer as allowed for a particular customer. So if there's a credit limit, it means that the customer cannot order more than that particular limit set by the management. All right? So the more or the higher or the better the credit standing of the particular customer, the higher the credit limit is set for them to order. All right? Now, for the checking of inventory availability, note of this picking ticket, which is prepared now or being generated that lists the items or quantities that the customer has ordered. The picking ticket now authorizes the inventory control to release the merchandise. Without the picking ticket that will be shown, the inventory will not be brought outside the warehouse. Kasi internal control din siya. Without providing for the requirement of a picking ticket, then everyone can just pull out inventories from the warehouse whenever they want. But with a picking ticket, we can actually track the movements of the inventory in and out of the warehouse. Kasi only approved picking ticket will make sure that inventories that are brought out of the warehouse are already pre-approved or authorized based on a legitimate or approved customer order. Other than that, kung may nilabas man yan sa warehouse na walang picking ticket, then that could be theft already. Or someone in the warehouse department has embezzled or misappropriated the inventory for personal usage. Now, to respond inquiries, basically this is what we call for the customer relationship management or CRM, which will provide now personalized service to the customers, telling the customers or answering the customers as to the status of the orders, the tracking of the order, or the estimated time when they're gonna receive these particular items or inventories. Now, notice, class, in the sales order entry, we have threats here. Threats include incomplete or inaccurate orders, invalid orders, uncollectible accounts, stockouts or excess inventory, and loss of customers. Kasi di ba nga, pwede namang hindi tumuloy yung customer, or pwedeng the order is made out of a fictitious customer by some scrupulous members of the organization. Now, to control these particular threats, then we have these particular remedies. Say, for example, for incomplete and inaccurate orders, the remedy would be to have a data entry edit controls and restriction of access to master data. Say, for loss of customers, a suggestion of a control will be to improve the CRM systems and to provide self-explanatory and well-informed websites and proper evaluation of customer service ratings, right? Now, let's proceed to the second sub-activity, which is the shipping function. In the shipping function, class, note that the pick and pack part will be when the items are received from the warehouse. Once received from the warehouse, they will be picked from the warehouse and packed accordingly based on the packaging strategy or packaging methodology for the particular shipment. Because sometimes the packing will be based, the number of packages will be based on the sufficiency of space in a container van or the delivery method, whether it's shipping or for logistics or land delivery. So once the items are packed properly, then they are ready to be shipped, and these will be shipped by the shipping department. Now, the shipping of these goods will include now the preparation of what we call of a bill of lading and the packing slip, as mentioned in our discussion in the context diagram. The packing slip together with the bill of lading will be forwarded together with the items to be delivered to the customer, to the carrier or the shipper. Sila yung magde-deliver ng items to the particular customer. Note that in the shipping of goods, a copy of the shipment document will be forwarded to the sales order and then will be forwarded as well to the inventory department para ma-update yung balances with respect to the items removed from the warehouse. Kasi yung warehouse na yan, kailangan din mag-update ng records because the items were removed, were actually moved out of the warehouse for delivery. And then another copy will be provided to the shipments department. The back orders naman, if there's not sufficient, will be forwarded naman to the expenditure and production cycles. Now, if you notice the pick and pack function, which is the first one in the shipping function, sub-function, I mean, the picking ticket generated by the sales order entity process triggers the pick and pack process. Warehouse workers use the picking ticket to identify which products and the quantity of each product to remove from inventory. And the warehouse workers now record the quantities of each item actually picked. Okay, either in the picketing ticket itself or by entering the data into the system if this is an electronic or automated system. Now, when the items are being shipped, note of these documents, packing slip, which lists the quantity and description of each item included in the shipment, and the bill of lading, which is the legal contract that defines the responsibility of the goods in transit. Note that the bill of lading class identifies the carrier, sino yung nag-deliver ng item, the source, the destination, and any special shipping instructions like yung mga freight, FOB, shipping point, or FOB destination. It determines who owns this inventory by the time of delivery to the shipper. Pag FOB destination, the items are only transferred. The ownership of the items will only be transferred upon arrival at the destination. So kapag FOB destination yan, according to the bill of lading, the inventories are automatically under the ownership na ng buyer upon arrival at the destination. But if it's a shipping point, upon loading pa lang dun sa barko, hindi pa umaalis from the shipping point, from the point of source, is pagmamayari na siya ni buyer. Wala nang responsibility ngayon. The seller no longer bears the risk and loss over that inventory because ownership is already transferred at the point of shipping. That's why we call it FOB shipping point. Also, payment terms include another agreement with respect to damages or remuneration or indemnification of damages should anything untoward would happen to the delivery are also laid out or provided in the bill of lading. Right? Now, these are copies now of what we call the packing slip and the bill of lading. And if you notice, the bill of lading is more wordy because it is a legal document. It establishes relationship between the buyer and the seller, and of course, the carrier or the delivery or the shipper in relation to the inventories being delivered. Okay? While the packing slip is an internal document, it only enumerates now the items packed for delivery. Right? Now, you go through these particular threats class on the shipping one, and then the suggested controls here include, hi baby, and picking the wrong items, shut up, or theft of inventory. Now, let's proceed to the billing departments. The billing department would result to the preparation of the sales invoice, right? And the sales invoice basically is being sent to the customer, right? Now, anong issue dito sa billing? Obviously, when you prepare for the billing statement or the invoice, you have to prepare now or update now the balances of that particular customer. And we have two methods here, the open invoice method, where customers typically pay according to each invoice. Pag open invoice method, each invoice will be retained open or unpaid, and then babayaran siya isa-isa ni customer. And once payments are received, then the invoice will be closed or stamped paid. So they're no longer pending invoices or open invoices. However, in a balance forward method, customers typically pay according to the amount shown in the monthly statements. So it's not per invoice, but rather all the invoices created in a particular month will be totaled under a single voucher or a single document. And therefore, that monthly statements will include transactions na cut off within that particular month. So kung merong delivery na nangyari next month or previous month, hindi na siya kasali sa monthly statements. And the monthly statements are to be paid due or demandable, say probably 15 days at the end of the month period. Tapos, pag isettle yan siya, bayad na lahat, and then ililista na lang lahat doon yung mga invoices. Kasi sa isang monthly statement, it may include several invoices as opposed to maintaining individual invoices tas babayaran ni customer. Mas convenient ang balance forward method because isang document lang ang ma-receive ni customer at the end of the period, and that will be an enumeration or summary of all the invoices or transactions. These invoices representing sales transactions within that particular month. Baby. Now, an example of the invoice and monthly statement is shown in the slide deck. You notice the invoice there will include the name of the customer as well as the address to be shipped and the items enumerated plus the quantity or the amount involved. Now, the monthly statement naman would include, if you notice, invoice number. Kasi enumeration siya ng mga invoices. Right? Now, again, you go over the threats and the controls now that are suggested to address these threats in the particular sub-cycle activity for billing, which would include failure to bill or billing errors, posting errors in accounts receivable, and inaccurate or invalid credit memos. Now, let's proceed to the fourth one, which is the cash collection. In cash collection class, it's similar to the voucher and non-voucher system under the expenditure cycle. Note that in a non-voucher system, walang summary ng mga invoices, and these are posted to individual supplier records in the AP account or AP file. The open invoices represent now invoices that are not yet paid by the customers. Now, in a voucher system, on the other hand, it's similar as well to the cash collections. Kasi ito naka-voucher na rin. It's same to the forwarding method doon sa sa yung nakalagay sa kabilang slide deck kanina. All right? Now, this is the end of our chapter 6 on revenue cycle. Note that the revenue cycle and the expenditure cycle will be inverse of each other, but basically they move for a single objective, but the objectives are kind of inverse of each other. But note that the expenditure cycle and the revenue cycle are the more active cycles inside an accounting information system, right? Okay, so next meeting we will discuss the next cycle, which is production cycle. I believe that it's better now that we do this one rather than I'll do a live discussion so that you can have your time on your own pacing. But note that you have to watch this lecture hand in hand with the material that I'm providing, but also do additional readings as well on the particular reading material that has been provided inside our classroom. So we'll probably meet next week to discuss the direction of our laboratory. We're still waiting for the go signal for us to be able to use now SAP HANA because we have problems now with access. But I was assured that this will be a web-based system, so therefore no need for installation. But I'm actually still hesitant with respect to the guidance of doing the actual how should I say this, the actual training because of some internet issues that many might encounter. Because it would be best talaga that we do it live na parang sabayan, but we'll still try to record our training for SAP HANA so that you may be able to go back to these trainings if you would have clarifications or you were not able to get it, para naman evergreen yung ating mga learning materials na you can just go back after or when your internet connection is bad, you can still access on them. All right, so thank you so much. See you next week, or probably another video lecture on the next transaction cycle.